Hello and welcome to the weekly RANsquawk wrap. So firstly, we're just going to take a look at what happened today regarding the EFSF and ESM in that Eurogroup meeting in Copenhagen today, and then secondly we'll take a look at the key events for next week. So in Copenhagen today, the Eurogroup agreed to raise the firewall on the European bailout funds and to set the cap for total lending capacity of the combined EFSF and ESM at 700 billion euros. So as a reminder, it's currently set at 500 billion euros, but when the ESM comes into place in July, that cap will be raised to 700 billion. The EFSF lending capacity currently stands at 440 billion euros, with 200 of that already committed to the likes of Greece, Ireland and Portugal. Now there has been a bit of dissent amongst many of the ministers today, quite a few asking for it to be raised to 940 billion euros. Now the reason that they've set a compromise and decided on the 700 is because the likes of Germany and France, they would be the main contributors to this fund and they do not want to expose themselves further to Europe, so they agreed on this 700 billion cap. Now, many of the ministers now say that this leads the way or paves the way for more funding from the IMF. That decision will be taken on the 20th of April meeting where the IMF are meeting with G20 ministers. So they are likely to make up the slight shortfall from the 940 billion euro cap that many were asking for. Now this increase in lending capacity is going to be paid for in several tranches, so 2 this year of 32 billion, 2 next year of 32 as well, and then 1 the year after that in 2014 of 16 billion euros. This was going to be paid over a 5-year period, so this has been reduced to 3 now. And the cap will also reduce back to 500 billion euros in July of next year when the EFSF expires. Now, also today we saw the Spanish committee, they passed their budget proposal. So this is the most austere budget we've seen since the 1970s from Spain. They're going to reduce the central government's deficit by around 27.3 billion euros and take their deficit as a percentage of GDP to 5.3%. So this was the target suggested by Brussels. It was initially 8.5, however this softening took place a few months ago where they made an agreement. But as far as Europe today, they're the main news stories, and now let's take a look at next week's events. So just taking a look at the key events for next week, and the main theme is going to be rate decisions. So on Tuesday we have the FOMC minutes for the March meeting, on Wednesday the ECB rate decision and a press conference from Draghi. So this is a slightly earlier day on Wednesday, usually a Thursday, but on this earlier day due to the Good Friday holiday. And on Thursday we have the Bank of England rate decision. So firstly, taking a look at the Bank of England, it's unlikely we're going to see any policy changes. Many analysts expecting the rate to remain on hold and also their asset purchase facility to remain, or their target to remain at 325 billion sterling. At the last minute meeting, we saw 2 of the members dissent and request an extension to the asset purchase facility. However, it's unlikely we're going to see a change as the current programme hasn't quite run its course yet. Now, in terms of the FOMC rate decision, the March meeting saw no real change in policy. However, it'll be interesting to see the opinions of the various FOMC members, especially their view on further accommodation. So many in the market still looking for any hints of further QE3, especially after comments from Bernanke last week. Now, also worth of note are any projections we might see. So recently we have seen various comments from members of the FOMC where they've had differing views on GDP and inflation projections. So any sort of numbers will be interesting, and any dissenters, including Fed's Lacker, who has been a recent dissenter in times gone by. Now, in terms of the ECB rate decision, again, many analysts expecting the rate to remain on hold at 1%. But interesting will be any commentary on their various bond buying programmes. So recently we've seen a reduction in the number of covered bonds purchased under their covered bond purchase programme, and also the S&P programme has been very inactive in recent times. So recently we've seen no bond buys in the various weeks. So it'll be interesting to see if this programme will continue or actually be halted. And also any commentary on the LTRO will be quite interesting, because this has not really been filtering into the economy as the ECB had hoped for, especially with monetary data showing some slight weakness. And also inflationary pressures have been or will remain on the upside, it's likely, as oil prices remain high. So they're the main points for next week: the FOMC minutes on the Tuesday, the ECB rate decision on the Wednesday, and on Thursday the Bank of England rate decision. But that's all from me for the time being. Hope you have a very pleasant weekend, and we'll catch you on Monday.